Okay, folks, so I want to highlight some key notes on Tesla stock and also cover what's going on with the overall market and talk about some catalyst events that could severely just flip the script on everything that's taking place. But before we do so, I want to talk about something that I found very interesting, right? So the other day I logged into my Twitter account, which has become very habitual, and honestly, I don't think it's good for the longevity of my sanity as there's a lot of craziness on Twitter. However, I saw this tweet by Elon Musk and I wanted to just cover it for a quick minute. Now, in this tweet, Elon Musk mentions, I wonder what would have happened in 2009 if the Fed had raised rates instead of lowering them. Now, the reason why I believe Elon Musk made this tweet is because we're heading into an unknown time. See, everyone acknowledges 2009 as the financial crisis, and as you can see on the chart, we had rates getting cut actually starting in 2008 as we were heading into the recession, which is completely different from what's taking place now, where we're actually continuously raising rates, where many economists already believe that we're already in a recession or we're possibly just on the verge of entering into one right now. And we don't know what is going to be the outcome. Now, I also want to highlight another tweet that Elon Musk made right after that, where he stated, the higher the rates, the harder to fall. Now, we're in a risk-off market where it just honestly doesn't make as much sense to put your money in a risky asset like the stock market when rates are getting raised and consumer demand is softening, which is why we've seen a lot of pain in the overall market in the recent months. Now, the S&P 500 has been very bullish in the last few trading sessions. However, I do want to point out that we're still long-term trending downwards and we're actually approaching a descending trend line. Now, if you guys are part of the Push and Profit program or you watch my videos on YouTube, then you know that you should never just trade based on one data point and looking at the lines on a chart, because God knows how many squiggly lines you may draw on the chart that really don't influence the price. And what really influences the price is several different other data points. And I want to highlight something that is very significant coming soon that could really just shift the whole direction of what's been happening. Now, I mentioned this before in the Push and Profit private group about a week ago, and I might have mentioned this on the channel maybe once, maybe twice, but I do want to emphasize this as this could be a significant pivotal moment for the overall market, and that is earnings season. See, we have Q4 earnings for 2022 rolling out for the overall S&P 500 in the next couple of weeks, and this could be a big issue, right? Because we already know that as the Federal Reserve is raising interest rates, that's going to stifle demand for consumers, right? Obviously, this is the goal of the Federal Reserve. They want this so that inflation could cool down. They want people to spend less money, and they honestly are trying to do a soft landing. However, we don't know if that's going to occur. Now, we already had some earnings for companies like Wells Fargo and a lot of other big banks. And one of the main issues with Wells Fargo is that they're already seeing revenues from their business really decline as people are not really refinancing, which obviously makes sense because in this era, who wants to refinance with rates this high? Now, another issue that Wells Fargo mentioned in their recent earnings report is that the risk for consumers defaulting on their credit is a big concern. See, one of the things that we're seeing holding up demand for consumers is consumers are relying more on credit. But what's happening now is banks are kind of being a little bit more tighter with the credit lines that they offer because they don't want to expose themselves to too much risk of people just not being able to pay the credit. And so if we had the banks start tightening and less likely to give out credit, well, guess what? Now we're going to have demand even stifle even more. And that could bleed on into the next couple of earnings that we have coming out. However, I think our main focus should be the earnings coming out in the next couple of weeks. And then from there, assess the situation and look at what's going to happen in the earnings going out. Again, I mentioned that the S&P 500 is at a pivotal moment, and this is honestly a moment that we really want to pay attention to. Are we going to go ahead and break above this descending trend line, or are the earnings going to be really bad and cause investors to really just kind of flee away from the market? Now, are we going to see more pain come into Tesla stock if the overall market starts selling off? And that's a high possibility. See, when the overall market starts selling off, people may start leaving stocks in general like Tesla as well. However, I want to point out something special that Tesla has. So although we may see some more downturn for Tesla in the next couple of weeks, Tesla has something very special that may actually help it throughout 2023, and that is pricing power. Now, we don't know exactly how this is going to play out because we don't have the numbers just yet, but something that we have seen Tesla already do is reduce prices. And now a lot of people saw this as very bearish or very bad. Tesla's reducing prices. However, this could actually cause more demand for Tesla and help its revenues actually sustain itself while other legacy automakers are actually seeing a decline in revenue. See, what happens in a recession is that, obviously demand for, consumer products starts to dwindle down, as I mentioned in this video. And then of course, if banks are going to be a little bit more stricter on, giving out credit, well, that's going to be just as bad as well. However, if a company like Tesla has the ability or has the pricing power to still hold above margins while reducing prices, well, what does that do? That ends up bringing in demand, and that could actually help Tesla stay, a little bit more sustainable during a recession, while other, auto legacy companies are going to have a severe problem. However, we don't know how strong and how impactful the pricing power Tesla has. So that's why the Q1 earnings for Tesla is going to be very important to pay attention to, because we'll see how revenues for Tesla is doing after price cuts and compare that to the other auto legacy companies. With that being said, let me know in the comment section below, what are your thoughts for 2023 for Tesla stock? Is Tesla going to be ahead of the curve for all the other automakers, or are they going to fall below just as bad, right? We don't know, but I want to hear your opinion on that. Now, real quick, if you guys don't know, if you want to be a part of the Push and Profit private group, where I talk about what I'm looking into the market every single day with stocks I'm watching, and I also update you guys with market events, make sure to click the first link in the description of this video. I will also pin a comment for that, because there is a 50% off coupon code to join the program. You get over 5 hours of video lessons from me, and of course you get to take part of our daily briefings, where all the information I'll say on YouTube comes way ahead in the private group. By the way, also guys, make sure to check out this playlist I have right over here with helpful trading tips, and I'll see you guys on the next video. Take care.